So in our first F&B slot for this year, we are going to be taking a look at the Johannesburg Stock Exchange. We'll look at the market performance, the gold prices, and also what to expect in the week that is to come as far as inflation and retail sales are concerned. For this conversation, we're joined on the line by investment research analyst at First National Bank, Sithembile Bopela. A very good afternoon, Sithembile. Welcome to Africa in Business.
A very good afternoon and pleasure to be on the show for the first time.
In 2026, right? Great to have you with us.
Yes.
Look, let's take a look at the market performance of the Johannesburg Stock Exchange today. Can you take us through that?
Yeah, I mean, the market has started off the week on a soft note after what has been an otherwise quite positive start to the year. And today, the markets, the JSE was down just below 10% or 10 basis points rather. But year to date, the all share is up just under 4%. So a lot of that we are seeing stemming from the strength that we've seen among the resources. Our market is quite heavy on the basic materials, just historically, that's been our biggest export. So unsurprising in the commodity bull markets that we've seen play out. We've enjoyed such solid returns over the past year, specifically from the precious metals, which are up about 11% since the start of the year. The PGMs or the white metals really shining bright, but also gold being very well supported as well. Even today, we saw red screens across the board, but the resources, they bucked the negative trend and finished the day in positive territory, bucking the trend against the rest of the markets. And I mean, what's driving the negative mood isn't necessarily what's happening on the local front. There was very little by way of company news or sort of economic developments today. So the JSE, I think, is more so following in line with other international markets that have come under pressure.
Let's look at the performance of the rand. At the moment, the rand, it remains resilient, and this is despite the prevailing global risks. What is driving the strength for the currency?
Yeah, I mean, the rand is still very much considered a commodity currency. And so, as I mentioned earlier, our local markets is very commodities heavy or reliant. So the strong commodity prices that we've seen have helped the rand strengthen quite meaningfully. I mean, we're around 16 rand 40 against the dollar, which are levels that we last saw in 2022. So we've seen a very strong performance indeed. Of course, there's more to the story than that. The market is continuing to sort of reward South Africa's improved fiscal outlook, improving consumer and business conditions. There's been progress on the reforms in energy security, for one. Eskom has turned a corner, but also the anti-corruption being some of the big sort of factors that have been influencing risk appetite towards our local economy. And so there's also been stable domestic inflation. That environment has created a more conducive sort of backdrop for the rand. And I think that's definitely been an attractive landscape for our local currency.
And as far as global equity markets are concerned, how are they responding to the trade uncertainty and the global risks?
Yeah, I mean, we are seeing some softer performances across, international markets. I mean, the old saying, if America sneezes, the rest of the world catches a cold, that is still very much relevant. And we are seeing sort of the geopolitical tensions that we've seen heating up, specifically the events over the weekend, the Trump administration imposing tariffs against 8 European countries or threatening to impose tariffs against those European countries. That has not been met positively, of course. It's just reigniting some of the fears that were sparked last year around the tariffs and the potential implications to the rest of the market that those might have. And so we have seen equity markets across the board come under pressure. In Europe, the Euro Stoxx 600, which is a broad benchmark of the European market, that fell over 1% on the day. And really, again, it is just the geopolitical actions that we are seeing that have sort of reignited the fear in the market.
I'd like us, Thembile, just to wrap up really quickly with what is lying ahead for us as far as inflation and retail sales numbers are concerned for this week.
Yeah, so we are expecting inflation this week. Consensus is for inflation to remain well within the SARB's current target range likely cooling towards the 3.5% level. If that does hold, it will back up the case for a more measured rate cutting cycle, sort of giving the SARB space to cut rates further. On the retail sales side, we know the holiday season is typically a strong period for retailers. And so, markets are forecasting a rebound in retail activity for November, December. And so a strong number there would, I think, confirm that the SA consumer is in a better place and is finally starting to sort of recover.
Thank you so very much, Sithembile Bopela, for the very first FNB wrap for 2026. Looking forward to chatting to you again soon. Thank you so much.
A pleasure. Thank you for having me.
Thank you. That's Sithembile Bopela, Investment Research Analyst at FNB.